Morning all. How are we all doing? How's the microphone this morning? Is it working? Does it sound good? Let me know. I haven't touched it, so hopefully it's working. There hasn't been any updates, so we'll see. Morning Mark, morning James, morning FTNet, morning Evil, morning Wojciech, morning Barry. How are you all doing? All good? Anybody still there? I can see names coming up and everybody saying morning, but no one's answered if my mic is working. Am I on a delay? Are you there? Have you gone off and made a coffee? Sound is good. Good. Right. So, excuse me. This morning we're going to do the usual stuff. We got news today on interest rates. So we'll have a look at the pound, potentially what's going to go on with that. We're going to do the usual analysis stuff. I'm going to go through also this morning the preliminary results, if you like, of the new ORB version that I'm running, just to show you what's happened with that so far compared to the back testing results, which I need to get up. Testing, pause, ORB 2, there we go. Yeah, and then we're going to do a quick session on how to identify, or rather how to kind of read balance and price discovery. So it's a little bit about how the market moves today, to do with balance and price discovery, because it's kind of an expansion on one of the videos we've already got about reading price action and market movement, basically. So how the banks and institutions trade and how that is related on the chart, basically. So banks and institutions go through phases of trading on every instrument, which is either an area of balance or an area of price discovery. So I'm just going to go through how that works, why it is there, why they do it, and how to identify it on a chart. So it's something that I think will help people stay in trades longer, which is one of the big problems most people have, me included. So if you can identify when you're in price discovery, you can identify where price is going next. So you can identify the next area of balance. It's all about finding areas of balance in the market, because that's all price does. It moves from balance to balance, and those periods are called price discovery. So we're going to go through that basically. It's not particularly complicated. It's very simple. There's lots of other words for it. You've probably heard accumulation, distribution, all the crap that ICT came up with. It's all ripped off from the same stuff that's always been there, that banks and institutions have always used. Just recycled, put in a new box and sold to you as something different. So just going to go through that basically to explain the theory of it, really. So we'll start off with the news as usual. Morning, Lucas. So this morning there's not a lot on really. We got construction PMIs at 9:30. The main news today, which is the main news of the week, is the Bank of England interest rates. So we are dropping interest rates to 4.5 from 4.75 at 12 o'clock today. Morning, Phil. So we've got an interest rate drop coming, thankfully. Mortgage will come down when I need to renew it. Yes, I've still got a mortgage, I know. So basically, that's what's happening today at 12 o'clock. So we'll see what happens here. There's no reason why we shouldn't get it. Markets seem to have already factored in that that's going to happen. It's still incredibly high, though. If you look at the interest rates, 4.75, we've got the highest interest rate out of the developed world at the moment. And we're dropping basically down in line with the US. So, you know, it's the worst interest rate we've got out of the lot. So it's just another 0.25%. It shouldn't be massively bullish and it shouldn't be massively bearish. However, if the votes for reduction or increase come out different, this is what tends to move the market. So the forecast, this is the bit that really moves the rate, moves on the rate announcement, not the actual rate. So as you can see here in December last time, we had a 2.7 forecast and we got a 3.6. So basically this is the increase. I think it's, I can't remember what order they do it in. Increase, decrease and stable. Yeah. So this is the number that wanted to increase rates. Obviously it's all zeros. No one wants to put it up. This is the number that wanted to decrease rates. So there was more people wanting to decrease rates than expected. There's 9 board members. So 3 of them decided they actually want the rates down. We were expecting only 2 of them to do that. Therefore, that becomes bearish. So this number here is the thing that will drive the market today, whether that comes out red, green, or black. If it comes out green, it means that they want to put the rates up. Or in this case, we're expecting 8 out of 9 members to say drop the rates. If it turns out that only 5 out of 9 members said drop the rates, that means that we're likely not to drop rates in the future, which is neutral to bullish for the pound. Yeah, so that color is actually what moves the market, and it's usually pretty accurate. So we'll see what happens there. The unemployment claims are coming out at 1:30, and then we've got Bailey and Waller speaking this evening as well. So unemployment claims, obviously, you tend to get a bit of movement off of it, usually just intraday whipsawing, doesn't tend to send the market off into any spirals, because this is the thing that they're interested in, the unemployment rate, which comes out tomorrow, aka non-farm payroll. So that's tomorrow. Obviously, this is the other big mover. Now, I've no idea what this is going to do tomorrow, because we've got the Trump effect in play at the moment. The market might just go, oh, yeah, whatever, because they're not interested in anything but what he says right now. So if the unemployment rate is going up and he manages to buy Gaza or take over Gaza rather than not buy it, he's just going to send the troops in and take it, he said, and turn it into a holiday resort, obviously that will go down, because a load of Americans will go over and work over there and create the new Dubai. Not going to happen, but anyway, more likely to start World War III, isn't it? Because the Palestinians don't want it. So we'll see. But anyway, so that's tomorrow's movement on the US. So today it's all about the pound. So we're going to have a quick look at the pound. Overnight news, there's nothing of interest at all. Just nothing. Bank of Japan waffling on. Interest rates to be about 1%, at least the second half of 2025. So we knew this anyway. I don't think that moved the yen, that news. When was it? 1:30. We'll just quickly check. Yeah, no, it didn't move. There's no ADRs. So that was the only overnight news, really. We know that that's going to happen. So they're gradually increasing those interest rates. So what he's saying is we're going to put another 0.5% on it at some point this year. Great. That's so they've become very similar to the Swiss now. If you look at the Swiss rates at 0.5, they are getting up towards 0.5, 0.75 ones. So they're becoming more of a normal currency rather than a carry trade. So this is why I'm a little skeptical about yen movement at the moment, because I think it's going to go and fall more in line with everybody else. If it loses its safe haven status, which it could potentially do over the next year to 18 months, we're going to find the Swiss franc is going to become the volatile one and difficult to trade, which it already is pretty difficult. But anyway. Right, so there's news done. Quick look at the markets this morning. DAX, 2 losses yesterday, unfortunately, on these. Couldn't get out the hedge. Tried to hedge exit on the DAX yesterday at 5, actually more than 5R I took yesterday on that. I moved this yesterday up to the gap fill, look. Yeah, so there's the gap fill. I moved my target up to gap fill, which we hit and we bounced at beautifully as expected. Got in the additional trade, and then it continued to push. So unfortunately, it was about £500 loss yesterday on the DAX. No trade, typical. There was no trade on the FTSE yesterday. That's the one that did the 5R clean break. Range was too big. NASDAQ yesterday was the same. I didn't post any of these results yesterday. No, sorry, NASDAQ, there was no trade on yesterday. It was a clean break, though. Dow, hedged, unfortunately. Same thing. Couldn't get out the Dow. Did try an aggressive exit. Couldn't get out. In propulsion as well. So, yeah, it's a crap day yesterday. We'll see what happens today, though. So let's get the DAX, the FTSE back up. So DAX at the moment... 5-minute ORB is being taken, and FTSE already triggered long on the pre-market this morning. So we'll come and see how those are going. So I'm going to quickly start off today with the new version of ORB. I wonder if I can use the new Trade Manager dash on this. Bear with me one sec. Just to make the results a little clearer. What am I doing? Let me just quickly tidy up the chart. Okay. So these are the results for the last sort of 7 days, as you can see. You can't see it. I can probably make the text bigger, but then I'm going to adjust all the lines and everything. But yeah, so basically over the last week, it's done 14. I mean, it's only actually been trading for 3 days. So this is only 3 days results. Ignore the percentage gain because it's just set on 10 grand. I don't know what the account size is. It's a demo. But this is done 1483 profit basically in the last 3 days. So you can see we had a down day. Then we had a nice $800 profit. Then we had a nice $700 profit. No open trades at the moment so far today. So it's doing very well as a strategy, and it's kind of doing the same as I witnessed in the testing. So if we look at the these two today, so the FTSE and the DAX, there's no trades on at the moment, basically because the ranges are too small. So that 5-minute opening range was less than 20% of ADR, and those are the settings that are being used at the moment. So it's got to be a minimum of 20% of ADR and a maximum of 40% of ADR. So we need a good, strong, that was a bit of a whistle, wasn't it? Big, strong open, which is the equivalent of getting high volume. If you remember, when I was developing this, we were looking at that report from the Swiss Financial Institute, which said that they'd found a correlation between the open being above average momentum at the previous open. So every day they took the opening volume and they made an average of that. And if the open was above that volume, the strike rate was a lot higher and the success rate of the trades was a lot higher and the moves were a lot bigger. So the profit was a lot bigger. So that's basically my because we can't use centralized volume, it's my interpretation of high volume opens. High volume opens tend to be wider ranges. They're not always the case, because volume, you could have 1 billion put through within 2 ticks and there is no movement, but there's massive volume. So it isn't always true. However, typically on high volume, you get high movement. So by using a 20% of average daily range as the initial opening, and this is what my statistics shown, that is the optimal to use. If we use that basically and we don't get it, we just don't take any trades that day. So it won't take a trade every single day on every single instrument. But as you can see here, that 5-minute range is too small. The 10-minute range is too small. This is why these lines are red. They'd be green if the range was above 20%. And the 15-minute range is too small because the 10-minute and the 15-minute are inside bars pretty much on the 5. No trade. So that's it. Done for the day. We're not trading DAX today. So we move on. FTSE. Same thing. Yeah, there's your 5-minute opening range. Your 10-minute opening range was inside bar. Your 15-minute opening range just ticked above there. Yeah, 10% of ADR is 940. So we need 1880 as a range. And the total range there is 1846. So slightly short, but no trade. So there's no trade on the FTSE today. So now we just basically wait for the Nasdaq, wait for the S&P, and wait for the Dow this afternoon. Yeah, and that's basically what the strategy is doing, and it's going for 1 to 3, 1 to 4R, using 10% of ADR as a stop. So very similar to the initial opening range breakout strategy. It's just a different variation. But the test results were incredibly profitable. Yeah, we ran 1,700 tests, and they all make money. Dow is not as good, but things like the Nasdaq returning 9.5 return on drawdown. These numbers are unbelievably high. I'm not using that one. That's like the ultimate max. There's no lot multiplication being used on these either. Yeah, when you put multiplication on it, it gets better. But so yeah, so just basically that's what I'm doing. So at the moment, the forward tests on this, I haven't done any further testing on it yet. I haven't had the chance, but at the moment, the test results are pretty much as expected. I've also identified, because I've been watching this, and if you've been watching the live rooms, I've been keeping an eye on this during the live rooms as well. I've noticed multiple instances where we've actually had a losing trade, and we've gone into a negative, like $500 or $300 or something, and then another break will happen, and it will take it up into a positive 200, positive 300 net, and then it will come back down and stop that trade out, because we're not using any type of risk trimming at all, using any trailing stops. So it's always advisable when you're scalping to try and trim risk as soon as possible if a trade works out, so that you're reducing that risk down. It isn't using any risk reduction strategy at all at the minute. So I think there's a lot of room for improvement on what I've actually got anyway, but I haven't tested it yet. That's on my to-do list. So I'm just going to run it as bog standard at the moment, which is basically a 10% stop of ADR. That's it. That's what's come out as being optimal, and that's what they found optimal at the Swiss Financial Institute as well. So yeah, it's all looking pretty good, but I will keep you updated on this. I've got further testing to do on it, but very simple strategy, and that's why I love it. That's why I love ORB. It's super, super simple. You can't get it wrong. When you have a back test of a strategy that has one condition, you can't go wrong. Yeah. So basically, at the 5-minute open, if the range is above 20% of ADR, go long and short with pending orders using a 10% of ADR stop. That's the rule. There isn't any other rules. So when you're doing any type of system parameter permutation, strategy development, out of sample testing, any type of back testing at all, and your strategy's got 10 rules, there's 10 times 10 times 10 times 10 times 10 variations you can use to make different results. You're always going to find something that works. When there's only one rule and it works, that's it. There's one rule. So if you do that one rule in the future, it will work. Yeah. The best possible strategy you can have has one rule. Most strategies that work have 2 rules, maybe 3: condition, signal, loss recovery. That's usually what you tend to get. So this is a great strategy because of its simplicity, not because of its complication. That's the best thing about it. So we'll monitor it. We'll see how it goes. It hasn't been going long enough for me to draw any conclusions, obviously. But yeah, 3 days, tiny little loss, and lovely gain. I don't know what the account balance is on this account. It's a 10k account, so I'm just going to set the dashboard up. Oh, not an indicator, Lee. So used to being an indicator. So I'm just going to set the dash up so that it's on the right balance. Oh, it is on the right balance. All right, okay. Have I got all the account history in there? Yeah, there is other, yeah, so that's basically, that was the previous testing on something different. So I need to be this month, really. 1483, yeah. So that's right. So 14% gain. It's obviously using high risk. But it's a scalping strategy. So, the idea is prop, account doubling, that type of thing. So anyway, I'll update you on it as and when. Good little test for my new dashboard. We don't have commission, we don't have swap, so I can hide those columns away because they're no use to me. I don't want to see that. I don't want to see that. And I don't want to see it on my weekly history or my daily history because we don't use them. Hide them away. I love my new dash. Anyway, right, I'll come back to that later, another time. Right, so market at the moment. Yes, new dashboard is exciting. I'm excited about it. Do you know what? It's the most exciting product I think I've worked on. I say product, most exciting project, if you like, I've worked on for a while. And it's not even going to make money because it doesn't take any trades. But to me, the most important thing is banking money. So therefore, to me, the most important thing is the trade manager dashboard because that's the thing that makes me the money. I see the money. I see the money. I react to what's there to make the money. So for me, actually, getting in is irrelevant. You can flip a coin, go long or short. But watching your account is what makes you the money. So for me, this is the most exciting product I've built in a long time because it's like I can see everything. It's brilliant. You can tell I'm excited about it. I get a little bit too excited. Right, markets today. We're just going to quickly whiz through this because there's nothing to look at. Again, it's absolutely flat. There are no ADRs today. Weekly ranges are all over the place because of Trump. There are no RSIs. The only RSI extension we've got at the moment is this US dollar yen on the 4 hour, which is at a very nice entry and it's ticking up now. So you need to be getting into it now. Out of propulsion as well. So it's a good little level, but there's nothing here. Look, this is the hourly RSIs. Yeah, I am flat. I'm still flat. This is the RSI account. It's flat. I haven't got any trades on. I can't get any trades on. There are no RSI extensions on the hourly time frame. It's the longest period I think I've ever seen where I haven't taken any new trades. And it's bizarre. So we've got a 4 hour RSI extension. I'm toying with the idea of just taking this. It's a yen and the swaps are good just to get into something because it's so dead. I think it's the zone trader, at least for me. What most exciting product? Yeah. Yeah, me too. I'm more excited. Do you know what? It's weird, isn't it? I spent years trying to find a system or a strategy that worked. And I basically, part one of the boot camp tells the story of how I became a position trader and how I took everything I knew, put it all together, looked at it all again, and threw away everything I knew was crap. And what I was left with was buying, selling, dollar cost averaging. That's it. It's pretty much all that worked ever. And all I ever used to do was exactly what we do with a zone trader. Was I used to draw in support resistance areas and press the buy and the sell button. And then I thought there must be an easy way to do this, which is where I moved over to RSI because I identified that when we get to support resistance, if RSI is extended, you could just use that. So I went over to using RSI. And then I was like, well, I need a reason to get in. And I knew that market structure was obviously the way that the market moved. So I thought, well, I'll develop an indicator that shows me when market structure breaks happen. And that's where that indicator came from. Then it all became a strategy using market reverse alerts, RSI, and position trading. But what I do in the zone trader account is going back to basics. This is going away from automation, back full circle to manual trading, which is what I used to do. I'm using automation, but I'm entering fully manually, as in analysis is all manual. Like that guy said this morning, can I load your set files up into a mobile phone? Why? so I can look at them on the mobile phone. You phone people on your mobile phone. If you want to trade, you trade on desktop because you need to do analysis, you need charts, you need historical data, you need back testing, you need a lot of crap. You can't do it on a mobile phone. But it is going back to basics, and it's great. It's nice to be trading again in a way that is just simple. It's like price is going down, it's going up, and that's what we're going to cover later on today. Is the balance and price discovery mechanism, which makes market structure. It's all the same thing. It's never going to change because that's what the banks do. But yeah. So yeah, flat on RSIs, totally flat. There's nothing to look at on RSI. The only opportunity we've got on elastic band theory at the minute, extensions, is that. And it's not a bad entry. So there is a possible market structure pullback going on. As I said yesterday, if you're in yesterday's live room, this does look like the spot if we are going to come and retest the intervention level. However, this is happening because the Bank of Japan are increasing interest rates. They've come out and confirmed again another 0.5% this year. Does that mean that it's going to do that? No. But does it mean it's going to continue to do that? Less likely, I think, now, especially with what's going on in the US and with Trump. So I think there's a chance that we could test it, but equally, I think there's a chance we could just do that. So either way, if you're getting in low time frame, just wait for a signal, basically, of any kind to get in. But it's the type of trade I would want to kind of protect as soon as possible. So it's one of those position trades where if it works out on the first entry, lovely. But it's a out here type thing in case this is going to continue, which it could well do. So we got a lovely propulsion gap target on the 4 hour, which is previous support to aim for. But yeah, tricky. Very hard to go against this at the minute. But that's it. That's your only extension today. We had a couple of RSI extensions yesterday which triggered on the hourlies. I can't remember what they were. So we've got US dollar yen there, obviously. US dollar Swiss was yesterday. Didn't quite get an entry on that yesterday. Why is that not taking a trade? Sorry, one sec. Fifth at 2100. I got a feeling something's got not right with the. Why is that reading 29.15? 21 median hourly. Why is that reading 29.15? That reading's wrong. Last closed candle was 44.15. Maybe that explains why I'm a flat. That should have taken a trade, surely. There. That was above that. I'm just checking RSI levels. 50.2. The US dollar Swiss, for some reason, is broke. 45.18 on that. I just need to double check this because I'm just concerned it's not taking trades for some reason. 45.15. So last candle closes there. Yeah, that's right. $46.62. That's right. US dollar Swiss 29.15. That's not right at all. Where is it getting that from? I'll come back to that later. I don't know why that's happening. Sorry. Just spotted that because that, to me, that looks like it could have been a trade, but actually looking at it in detail, that candle is the signal candle there. But I'm not, because that moving average would have picked up after, because that was bull. So that probably closed just below or on the moving average. That one was the actual signal candle that opened below, closed above, and the RSI was actually extended above the 30 level. But that doesn't explain why that is reading the wrong figure when everything else is. Anyway, I'll come back to that later. So yeah, upshot of today is, which is annoying because that's a lovely trade yesterday and it's working out nicely. There is no signals today, again, for position trading with the position trader EA because there's just nothing setting up at the minute. We are struggling on everything. The things, New Zealand dollar, US dollar, that was the signal yesterday, but it didn't close above. So depending on how you've got your EA set up, some people will be in this short. Well done. I'm actually asking for the candle that closes to be above the level. So I'm asking for that type of movement, a much stronger move, basically, above the level for me to get a signal. So although I've got mine set to 70.30, it really needs to be about 75 or more to get me in, because it needs to have actually closed that candle when the signal happens on the moving average cross. It needs to be above that level on RSI, which is why this strategy is actually not taking as many trades, but has a better strike rate because the move is faster and longer. So, but anyway, so there's not a lot really to look at there at all today. ADR reversals got slammed yesterday and the day before with a 12% loss. So it's down 5% on the month. It's made back 3% so far today. We've got potential for another sort of 2 to 3% bank today. So again, this is not unlike the back tests. Get big losing days. We've had lots of squeezy movement intraday from Trump. So it's going to have losses when Trump's around. Doing that sort of thing, because it only takes 2 trades and then it does drawdown control. So it's a high drawdown control strategy, this one. So it is going to hemorrhage cash. But when it doesn't hemorrhage cash, it milks it, as we saw in the back test, or maybe you didn't. Right, zones. So zone trader account, obviously this is the new reset one that I've set up. I'm trading basically the same thing as well, and I might just copy my own account, because this is going to be a copy account. So we'll go through the zones and we'll have a look at all of these. Some nice profit on there at the moment. Obviously not going to bank anything because it's all set up to bank on target. So I'm going to go through all the zones, have a look at where everything is. So triggered a short on the Aussie US today. So I was looking yesterday, if you were here, I was looking for a pullback into propulsion. So this is a propulsion gap. We pulled back into propulsion and we're bouncing out. So looking for bearish continuation like that. So target to the downside is retesting those lows. Need a new short. Short's going to be up at the highs. Tricky. This is just really tricky now. Everything is tricky with Trump. I've no idea whether the market is going to use this or not, or it's going to think that, or it's going to look at these whacking great spikes that he's put in. Every time you see a spike, it's a Trump. So God knows what you do with support resistance at the minute until he's calmed down. But this is the area that price was retesting, which is this previous high. Broke it, tested, broke through, tested. That is the support resistance level. So if it pushes up, I will get into a second short there. The next one will be up here because that will be too close. But we'll see. Hopefully it will just continue market structure to the downside. Aussies on a Swiss, waiting for a long entry on this one. That's going to be my exit in the gap fill. I've just put that block there to remind me. It's not taking shorts, but that's where I want price to go. But I want to try and get in on it. So this low is the support level. Yeah. So I'm hoping that we get a pushback down again, and then we can get a pop out of there. Obviously, this is a Trump move. This is a V-shaped recovery. So you just got to kind of ignore it. It's just knee-jerk reaction in price. It's not normal market structure. So, but that will be used. If we do break down, they will look to buy that level. So that's what I will do. Aussie New Zealand, looking for shorts on its way. Hopefully I'll get into this today. So again, looking for an exit up there. Sorry, bear with me one sec. I've just got to switch accounts. Oh no, actually no, I don't. That's right. Forget me, don't worry. So yeah, shorts on that one. Waiting for a trigger. Obviously backup will be here. Aussie US got shorts on at the moment. Second entry taken yesterday. First entry was there. I'm targeting this propulsion gap to the downside. Third entry will go in that gap. It's not quite filled, but I'm not sure whether or not we actually need to do that or not. But if we do, I'm just going to try and get in another short up at those highs because the gap is too close. That's next entry. Gap's too close. So I'm looking to get out down here, and I will flip long if we get back down into this propulsion gap, because I think they may well buy that back up into there. So I'm just going to quickly get out down there. As I said, with the US at the moment, I want in and out fast. I'm not going for the big, swingy moves with the US. You need to be in and out because this is going to happen. This is going to happen. This is going to happen. We're going to have these big, strong intraday moves. So you want to be in and out fast and just keep getting in and out of the US if you can, because at any moment in time he could say something stupid which either tanks or pumps it for a period of time. One thing I just forgot about, have I got an account that's got it? I have. Just wanted to quickly look at a Bitcoin chart because apparently Bitcoin went mental. Yes, just the V-shaped recovery. It's exactly the same. So it's just done exactly the same as the Euro US dollar, basically, isn't it? Bitcoin. It's just aligned with the indices and in the US dollar now. A lot of people moaning about getting killed in crypto at the minute. Don't trade it if you don't want to get killed. So yeah, shorts on that one at the moment. CAD Swiss looking for longs, so looking for propulsion gap fill. So this is the origin of that move that I got out on. So looking to get back in. If we get back down into there, see where we go. This whole area here is potentially obviously buyers, so we could just tap the top of that, which is that high wick there. So that's why I've got these zones set there. But I mean, anywhere around here, want to get it back in longs. So that's the gap fill done. We pushed up into the highs. We're rejecting those highs, so it's either going to stay range bound or this move is going to form market structure long. Euro odd, looking for shorts. Oh, I can't get in it. Still going. I just can't get in this. I'm loathed. This is a really fast market structure move. Look, really, really like what my old mentor used to call a sawtooth move, which is what I used to trade on the 5-minute charts. Used to trade sawtooth pattern. It's very, very hard to get into because if you get in on it and it's not the right one, you immediately get stopped out. But for us, if you get into it, obviously, it's potentially just going to go back the other way and we just scale into it. But I can't get in short, and I can't really find an area on this to get in short. So I've identified these areas here, this high and these lows, and that's where I'm going to try and get in. So this is a beautiful example of what we're going to discuss today: balance and price discovery. This is the area of balance. This is a price discovery failure. Now we're back in the area of balance. So I'm anticipating these lows holding and then pushing back up into the previous highs, because this is a non-tradable area, and then we'll come back down again. So that is my entry short. We'll look at that in a bit more detail. Remind me, euro odd, when we start talking about it. I'll remind myself. Euro CAD, looking for shorts. Support, resistance, propulsion, back. Yeah, looking for that entry short. May not get it, may get it, but that's where I'm looking at the moment. Potential for it to break short as well. Euro Swiss, first long on Euro Swiss out of the lows. So this is the zone you can see here that I drew in yesterday, which is these lows and these highs here, basically, which has been holding as support. We're there, so I wanted to try one here to get the gap fill done. It's pushing down a little bit more at the moment, so I need new zone to the downside, which is going to be somewhere around these lows. So we've got this area here we pushed into, we broke through it, retested, 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 looking for a retest there. That will be my target to the upside. Gap fill. So yeah, just looking for somewhere around the gap to get done. So that'll be the trade. Euro pound, looking to get in short on this at the gap fill again. So get that gap done and then continue that leg down. We are back in balance again. We are holding balance here. Another good example. To look at in a minute. So yeah, looking for a gap fill and then potentially a short out of there. Shorts on Euro New Zealand. I can't long it, it's too expensive. This is the one that I'm anticipating breaking these lows. And as I said yesterday, they're either going to hold it or they're not. If they do hold it, we're going back up to range highs and I will short that range high. It looks at the moment like it's bouncing, doesn't it? But if this is potentially a pullback short, we will flush that area and we will be off back down into here somewhere. So yeah, I'm not going to get in yet. I'm going to want it up here. So if it does start to look like it's doing this for a couple of days, this is holding. So there's two options when that happens. We can either zoom in like this and just basically go, right, let's try and get in short here and see if this area holds, because these are price discovery failures. Or we can just hold for the high, which is probably the better quality trade. However, this is the more risky but higher reward trade. So I'll see what happens. But if it just flushes, it's gone without me. Nothing I can do about that. I am actually already in it short on the other account anyway. Euro US dollar, second trade short taken yesterday. This is on its way to target. So put my backup short in. I don't think I'm going to need it on this one. So there's two areas here we can look at. This propulsion move, so the origin of the propulsion move is there roughly. So if we do fill that propulsion gap, think in the future of what happens with propulsion gaps. Propulsion gaps get filled and then they either get blown straight through or we fill the gap and we come back out of it. Yeah. So what I'm looking at here is there's a propulsion gap. We're either going to fill the gap and come out of it, or we're going to blow straight through it up into there. So the options are either to get in there or to get in somewhere up there. For me, that is about 3/4 of an ADR from previous trade. Absolutely fine. I don't want to risk waiting all the way up to there. But the other thing you can do is just go, screw it. I'll take the whole lot, please. And if price pushes up into here and goes like that, yeah, you'll get your entry there. You won't take the entry there. You'll take the entry wherever the price action deems the entry will be. So you get on board with the sellers. So that's a fine zone to draw in. However, it looks like I'm going to exit this shortly anyway. Do I want to adjust my target? It's US dollar. No, I'm going to keep target where it is. Be 0.5%. I'll take that. Pound odd, long trade on. Next short is already in place. Very hard to pick on this because this is kind of this little weird wedge pattern here. Then we've got this massive propulsion move which broke the highs, and the highs were descending. It's just a mess really technically. We've got this low, this low, this low which is retested, so that's where I've drawn the zone. Second entry long, which will be a 50% retracement if we're going to continue on an up leg. Obviously today the interest rate announcement's coming out and Bailey will lay out forward guidance, and that may well send the market in full tilt in one direction or the other. So I'll see what happens later today and reevaluate it tomorrow. Upside target, if we can get up to there. We got the gap which isn't filled yet as well, which was caused here. So that really is a decent target to aim for, but they may well double top that and then come back up there a week later or something. I'd rather be out and take the money than sit in it for another week waiting to get to the extra 20 pips or whatever it is. It's irrelevant. Pound CAD shorts, longs on at the moment. First entry taken yesterday, so that was taken out of here. Zone adjusted down into this accumulation break. So this is a propulsion gap. Yeah, I'm looking for the propulsion gap to get filled and then to bounce out of it. We got this. It's just weird price action again. There's a lot of weird price action because it's, it's just weird January, wasn't it? It was very rangy and didn't really go very far. So there's a lot of weird price action about. But somewhere in their first entry, if that second entry, if that doesn't work out, it's a case of just trying to pick a spot. But there's a lot of areas that you could sort of pick and pinpoint, so I'll deal with it later as necessary. It looks like it's coming down. Doesn't look like they're happy with the pound this morning. So upside target at the moment, I'm going for those highs, assuming that we're going to continue that move. However, if I need to scale in and average in, I will then probably move my target down into that propulsion gap. So just move the target down as my price moves down. So all we're doing is we're adjusting our price as price moves, and we're adjusting our target as price moves as well. Pound Swiss, looking for longs. Probably get this on today if we get a weak pound. So this area here is support at the moment, previous resistance. So yeah, looking for a bounce out of there. We're not going anywhere at the moment on this at all. So if I do get into it, obviously not going to go for much. So target's going to be up here, just in the highs really, somewhere. Pound US, shorts on at the moment. 2 entries on. That's coming down nicely at the moment. So at the minute, I've got a target all the way down at those lows. The next entry for me, obviously, that's too close to my next entry. We've got this little high here, and we've got this area here, which is a lot stronger. Yeah. So whenever you're looking at support resistance, I'm much more in favor of something that's been tested over and over and over and over again and respected over and over and over and over again, because you know that that is a pivot point that the banks and institutions are using during their trading. So this area here has been used 4, 5, 6, 7, 8 times as either a support or a resistance. Okay, so everybody, the banks and institutions, have been creating an area of balance, flipping around a pivot point, which is there. So if we get back to there, that makes a logical area of resistance. This could act as resistance. Yeah, so if it pushes up to there and it does that, I'll be, oh well, didn't get one on. But if it does that, I don't care. I'm short anyway. So I'm going to stick with that, although that would be my second choice as a previous area that has been respected. So it's been respected 3 times. It blew through it a little bit there. So that is another option for a short. But that is what I will watch to the downside. If I know my target's down there, if it gets there, I'm probably going to take it off. But this is a Trump. So if you ignore Trump and look at market structure, what we should be doing is that. Yeah. And we were trying to do that, and then Trump opened his mouth and screwed everything up. So again, over the last 2 weeks, price action is shot. You just can't tell what's going on because he screwed the market, which he does all the time. Long on New Zealand dollar CAD. First entry in there. Looking to get out in the highs somewhere. We'll find resistance. Next area for longs is a tricky one. So again, we've got this area here, which is a failed price discovery area. I'm going to use that terminology a lot this morning because that's what we're talking about. That is my next entry. The next potential area is here. These highs here, we couldn't get through. Those highs there, we bounced out of a little bit. So there is potential for it to bounce here, which it's done, which is kind of where I'm in. Hence that being the next level that I can see that is a logical place to get in. New Zealand dollar Swiss, looking for longs on the lows. Again, this is a Trump. This was the previous non-Trump support. So this is Trump support, non-Trump support. I've just drawn a zone around the whole lot, and I just want to get in long at some point. So we'll see what happens. We'll get down there, hopefully. If not, if it goes up, it goes without me. US dollars, New Zealand dollar, US dollar. Have shorts on second entry highs. Looking for those lows as a target. Bit adventurous, I would say, to get all the way down there. So I'm just going to see what happens. If we get a big news spike on non-farm payroll or something, if we get a massive strength in the US dollar, then I'll probably just consider a close manually on it on Friday tomorrow. But I'll wait and see what non-farm payroll does. If non-farm payroll is weak, unemployment rate is weak, we're coming up to fill the propulsion gap retest, basically. So there's a gap fill, and we'll retest the gap fill. We know they're selling that area because that's what they did there. They resold it. If we get there, they're probably going to sell it again. So that's my next play short. US dollar CAD have longs on, 2 entries at the moment. Next entry for me is down here. So this is the only area of downside support I can identify. This is the low. I'm already in. I bought that low because I had the zone here. There is a little accumulation there, but that is a much stronger level, I think. And this is a little too close to previous entry. So this is really where I want to scale into it. So again, we'll see what happens with the US. I could do with a strong US, to be honest, tomorrow. Decent unemployment numbers, but we'll see. So at the minute, what I'm doing is I'm kind of targeting this here. So this area here basically is where we had all this Trumpy stuff going on. Then we pushed up into that, which was that big move up. Then we had a load of volatility with the Canadian thing. Then we had the gap. Then we've undone the gap. So the upside target on this is very, very difficult. Obviously, that could be what our upside target is, and we're just going to fly with the US. But this is there's another one, US dollar CAD, very strong area of balance. This is a Trump, but people, you can read this as a price discovery failure. So that is an area of balance. If it's an area of balance, it's the area I want to target. So I don't know whether the market is taking any of this recent movement into account. If it is, fine. If it isn't, fine. So I'm just going to pull the zone down so it encompasses that little high as well. So just somewhere in there I want to get out. And I won't be flipping short because it's too expensive. US dollar Swiss, got 2 longs on. We're holding range at the moment, so obvious next range is there. It's this little high here. It's been invalidated, not tested very accurately at all. But this is the most recent low, and that is where I think we will buy from, because we did here. So there's a big spike into a V-shaped recovery, rejection. So rejected, and now we're off. So we've also rejected, and now we've come back down. So this is the battleground long. This is the battleground short. And I have to put my target in. Yeah, that's upside target. So upside target and third entry long down there. There we go. That is all of them. Any questions? Pretty simple, pretty much the same as yesterday. Not a lot happened since yesterday. I need to put my new, when I've finished my new Trade Manager Dash, I shall be using it on all my accounts because I love it. But yeah, nothing banked at the moment. Sitting in 0.63 profit. So hopefully we'll get something banked today off the UK. So we got the pound. I've got three £3 exposures on. 1 short, 2 long. So it doesn't matter what happens to the pound today. I'm banking something, which is always a nice thing. The US dollar yen, or not the US dollar yen, the yen pullback strategy that I'm running, forward tests as well. Had a down day today. It's still up, but it's had a down day today. I think it banked a profit yesterday. What did it do yesterday? Oh yeah, fifth yesterday, wasn't it? Yeah, no, it made a little loss yesterday. Day before it banked $3.5 grand or something ridiculous, which is the beauty of using trailing stops. When it doesn't work out, we take little losses. When it does work out, we bank shed loads. But to be fair, we bank shed loads because of Trump. So can't really take that as a norm. It's an outlier. We'll see. Right. Let's move over. So if no one's got any questions on that, we've got FTSE trade on at the moment, 1285 in profit, 1300 in profit. That must be hitting target, surely. Can't be far off. Oh no, it's far off. So there's your clean break in the FTSE. So there you go. So it's the what have we taken here? The 5, 10, 15. I forgot I set that up. I also set up the 30 on the FTSE. And you know what? That's just taken a 30-minute ORB. This is a 30-minute ORB. Yeah, I was looking at that thinking, why is that taking that? So the 5, so let's zoom in. If you remember, the 30-minute ORB is my next one to test. And I thought, hey, what? I'll do a live test on it. There we go. So that's kind of saved the day, or has it? Because we haven't hit profit yet. But look at that. We've got 1100. Should we bank it? I'm just going to let it run. It's not real money. Doesn't matter. So it's 5, 10, 15. So the 15-minute ORB was lower than 20% of ADR. We don't take any trades. We wait. So basically what we're saying is in the first 15 minutes, we just haven't had enough volume. It's just not playing out. Let's just wait and see what the market does. So then the market sat around for 20, 25, 30. So we said, right, we've got a 30-minute range now, and that 30-minute range is above 20% of the average daily range, and it's bullish. So we'll take a break long of that or a break short of that, because either that 30-minute push is not going anywhere and it's going to collapse back, or we are starting to break out. So it's taken the breakout long and we're off. Yeah, so that's a 30-minute ORB. Anything above that, I don't think is going to work. I'm going to test it, but I don't think a 60-minute ORB is of any use at all. But the advantage of the 30-minute ORB is on days like this. So this is a prime example. The DAX today, I haven't got that set on the 30. I'm going to set that on the 10 on the 30 as well, because I want to test the theory. Might set them all up actually. So the DAX today, the 5, 10, 15, no trade. Yeah, but the 20, 25, 30 would also today be no trade. Yeah, so this is a great example. The DAX today, there would be no trade on the 5, the 10, the 15, or the 30. The 60, you would, because we're 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. So that's your 60-minute ORB there. And that range is 704. We're looking for 500. So the range at the 30 was 449, not 500. So that today will take would. I wonder if that'll work actually, because I've just set that. Oh no, because we're not trading the hourly, we're trading the 30. So yeah, if I set that to an hourly ORB now, it would take the hourly as well. But days like this, where you've got no trade because it's too quiet, no trade because it's too quiet, using the 30, that is the time to take the trade. So it kind of needs if we haven't done one of those and made a profit, have a go at a 30. But again, it's one of those things I think you need to also be involved in. So if this thing had, God, I've got a whistle today, haven't I? I want to deafen everybody. You know, so if this had taken a 15-minute ORB, stopped out, tried a 15-minute short, stopped out, and then taken a 30, and the 30 is on its way, I would be monitoring this, looking to get back to break even and go, good, no lost day. However, if this had done a 15 or 5 or whatever and had hit target, I don't want to take the 30 because I've banked some. Because the 30 could well do that, couldn't it? So I think it's one of those things. It's automated entries, and you can leave it fully automated. It's a stop loss based strategy. The worst case scenario is you're going to get stopped out for 1R. Best case scenario is you could get 3R returns. You know, it can do that. But you know, it's one of those things where I think I also would want to manually monitor it. If I'd have taken 2 losses, and the losses basically are £560. This is a pound account. So if I'd taken 2 losses, which would have been 1,120, right now I'm sitting on a break even, aren't I? Get out with no loss on a choppy day. That's a result, isn't it? So I think you've got to kind of still manually watch even this strategy. I don't think any 5-minute strategy you can just set and forget, because you need to be watching what's going on with the whole thing. And that's the other nice thing about the portfolio. You know, if you get a portfolio where you're sitting on $350 of profit here, for example, on 2 trades, one of them hasn't really done anything, one of them's done really well, shut the lot, be done with it. Go, yeah, fine, love it, I'll take that. And I'll tell you what, I'll take half of that, I'll take half of that, and I'll take a quarter of that. Isn't it good? I know I don't need the buttons anymore. I love this. It's such a good thing. I want the buttons back. I don't want to see what the percentage drawdown is or not. I love it. It's brilliant. I'm going to close all that, actually. Might as well. Job done. Money in the bank. 102. What? Look at that. So that was actually worth £427. That's a £427 profit. They only gave me 325 of it because I paid $102 in swap. Swap. It's become the new evil in our world. Anyway, right. So today's lesson, or not lesson, today what we're going to discuss. Supply, demand, not supply and demand. We're not talking about that at all. Sun's beaming in. We're going to talk about balance and price discovery. So this is to do with market structure and bank movement and how banks and institutions move within the markets. So we know we've covered obviously in member streams before, and I talk about it all the time about how the market moves up and down. It moves from level to level. That's all it does. And it looks for areas to conduct business. So the way that the markets move in Forex and in fact in most instruments, whether it be a commodity, crypto, indices, whatever, it's supply and demand based on price action and volume. I'll answer your question in a minute, Mark. I just want to cover this session. It's not going to take long, this bit. So we know obviously that propulsion gaps are large bank orders. And basically, when you get a large bank order in one direction, the market gets caught offside. So if HSBC drive 100 million through the New Zealand dollar, US dollar, driving price down dramatically, Barclays, Lloyds, Citibank, and others will be caught offside. They will be in long positions here that they need to balance. Yeah, this is why we have balance and imbalance, or balance and price discovery. Yeah, so this is what we call an imbalance in the market, which is basically participants offside, drawdown. Yeah, so it's the same as you and me, position trading. Banks and institutions are long here. They don't use stop losses. They get in and they get the price driven against them, which takes them into drawdown. They have the power to push the price back. We don't. Yeah, so it's exactly the same thing. So propulsion gaps are large bank orders. And then what happens is the banks fill them. This is the inefficiency, imbalance, unfinished business, all terms you'll hear in the banking sector. That is basically what is happening there. That inefficiency is being filled. You get the odd inefficiency, and they tend to be smaller ones which don't get filled. This is called a loss. Yes, banks take losses as well. So these are areas where we just are not getting back to. You may get back there at some point, but it's insignificant business. So it's the type of move that causes these smaller propulsion gaps that don't get filled, which is what I call orphaned propulsion gaps, are where you get a bank or an institution that has a stop and reverse order in place, usually because they're in profit. And when the price dumps hard against them, what happens is all of their longs are liquidated into profit, and they have a stop and reverse order which drives them back short. So there isn't actually unfinished business there. It's finished, done. They're happy, their books are balanced, they've made profit. So the only time you get propulsion gaps, which are driven back to most of the time, is where there are new positions being added and they get driven into drawdown. If you have a position where you've moved up and you are in profit and it pushes down, often banks will have a kind of a trailing stop, which is called a stop and reverse order in place, that automatically liquidates the profit and immediately joins the momentum, yeah, to go the other way. So banks and institutions' jobs are to execute orders on behalf of commercial clients, on behalf of speculative clients, and on behalf of hedge funds. Yeah. So there is a massive amount of volume that goes through the markets every day. It's a $7 trillion a day market. And all of that volume is made up of mainly three order types. Commercial orders are big, large corporations that need X currency transferring into Y currency. So change all of my New Zealand dollar transactions on this day into US dollars, please, because that's where I need to spend it. That's what I want to hold it in. That is our base currency, whatever the reason be. They convert one into the other. These are non-price sensitive. Doesn't really matter. We just need it done, please. What's the conversion rate today? 1.7? Fine. Give me 1.7 to 1.75. and they will execute that through the day and the job is done. The speculative orders are the banking institutions using their own capital to drive the market in a direction to benefit them. So the book will be built up over a period of time, full of long and short orders, which are all accumulated, which is where you hear the term accumulation. And then they will have either a net long or a net short speculative position, and then they will drive the market using commercial orders in the direction that makes them the money and exit those positions. Profit. Yeah. So it's like you and me saying, I'm just going to wait until 2:30 and then I'm going to place an order big enough to drive the market up there. Everybody got that? Yeah. Everybody press the buy button now. Are you ready? Brilliant. Off we go. So that's a speculative order. Banks and institutions have the power to do it. There's nothing illegal. It's just they can do that, and they do that. So that's your speculative trades. Then you've got the hedge fund trades. Hedge fund trades are price sensitive, and hedge fund trades basically are executed on behalf of organizations which needs to hedge one position against another. Think things like corn needs to be hedged because they will grow crops with an expected resale value of the crop at some point in the future. This is what the futures market is. And the same with oil. They will produce oil. It will sit in barrels for 6 months before it's sold. So they will produce that oil at X and they will want to sell it at Y. So the futures market locks in that price. Hedge funds take the opposite side of the position, a hedge against the price that you produce it at and the price you want to sell it at. So if oil price goes down, the hedge takes a long. If oil price goes up, the hedge takes a short. More complicated than that, but that's the simple explanation. So those executed orders are price sensitive. They need to be executed at a set value to keep an average price in place. Yeah. So what happens when all of these orders accumulated together are placed into the market is these banks and institutions all need to get that business done on the day. So what we tend to do is sit around and do the business. Yeah. So banks and institutions, when you get movement like that, is called balance, and it means that the market is in balance. All of the transactions from HSBC have been taken by Barclays, and all of the Barclays Bank ones have been taken by Citibank, and Citibank have been selling to HSBC or whoever, and there is balance in the market. So there's 100 billion short orders going in, there's 100 billion long orders going in. It's balanced. That is literally what the term balanced means. Yeah. So a balanced market you will be calling a range bound market, or people will be calling an accumulation. Yeah. So that is then an area where price has sat for a period of time and there's never a determined high, there's never a determined low. It's an area where we do not go up or down. Yeah. And it will be variable. So you would call that an area of balance. Little bit of a spike out the bottom. This is a price discovery, which we'll talk about in a minute. Then we got a spike out the top, which is also a price discovery. And then we went back into balance. Yeah. So these areas here, which you would call ranges or accumulations, are what are also called balance. And it's just equilibrium in the market. Happy. If you think the market is in its happy place. Yeah. I'm Barclays. I walk in today, I've got 100 million commercial orders to execute. I'm like, Christ, this is going to take all day. And then Lloyd's go, I've got 100 million shorts. I'll have them. Bang. Happy face. I've got nothing to do today. I'm going to go down the pub because I've done my business, finished business. So that's the execution of orders. That's what the banks want to do. It's their job. It's the hard part of the job, is getting these orders in the market. We have areas of what we call price discovery. Price discovery are areas of balance which break, which you would also call a breakout. Yeah. So when the price breaks out of an area of balance, one of two things is going to happen. It's either going to be able to trade at that level or it's not. And what this is where banks and institutions need to get a different price point for their orders. So the hedge funds now need transactions conducted at that level. Or there are speculative orders, which mean we need to close the orders at a different level. So a bank or an institution will drive price to a higher point, which is what we call the breakout, obviously. And then what will happen is that will either hold and the rest of the market participants will come in and agree to trade at that price, or they will disagree because they need their business conducted at this price still. So it's just a battle between banks and institutions for where they could conduct business. Okay, so when you get an area of balance, you then have what's called price discovery. So this is a bank or a group of banks trying to discover if we can trade at a different level up here, because it's more profitable for them usually. If there's enough market participants happy to trade at that level, we will then start to trade, put more trade in, accept trade, do more, accept trade, and form a new area of balance. Yeah. If we cannot trade at this level because there's no one up here that wants to sell at that level, they want to sell at this level, it will be a failed breakout, which is called a price discovery failure. We then fall back into the previous balance and we stay in that balance. And then what typically happens after that is we try a price discovery to the downside. Yeah, because the new book will be accumulated short because we can't go long. We tried that, didn't work out. All right, let's try a short. Price discovery short. Now, if that works out, you tend to get a breakout, a retest, and market structure to a point where you do not get any more market structure and you find balance. Okay, all of these future balance points are unknown because they're in the future. We can't predict where they're going to happen, but they do happen. So if we look at this, we'll just use this chart as an example. I'll come back to the euro wad and euro pound in a minute. This is where Wyckoff, if you're familiar with Wyckoff theory, yeah, this is where Wyckoff theory comes from. Okay, so what Wyckoff theory is this is exactly what I want. This is an absolutely perfect Wyckoff example. So price moves down. Okay, Wyckoff basically is price moves down. We find an area of range. We have what's called a Wyckoff spring. We push back up. We test the high of the range. We accumulate there, and then we break. Okay, so that is a typical Wyckoff. This one failed, right? But that is a Wyckoff if you know what the Wyckoff theory is. So this is the balance. Initial price discovery, failure. Back into balance. Price discovery, failure. Back into the area of balance. Price discovery, acceptance. Okay, so that is a perfect cycle of balance, failed price discovery, and then basically getting out down to the bottom. So the way that we use these to help with future market movement is these areas of balance, or ranges if you like, and this is what I'm identifying all day long with the zone trader strategy, or just normal position trading. This is what we're identifying is where price has been, which is where price is going. So this is an area of balance, and they had a price discovery which succeeded, followed by a news event. And the news event drove the market so far there was an unfinished business, so we had to get back and finish that business. So we went into balance, and then the people that started this move tried to make it move further. It got rejected. And then we tried to go back up. It got rejected. We came back into balance down here. We pushed up, found new areas of balance. We pushed up, found a new area of balance. We pushed up, found a new area of balance. Filled. Yeah. So market structure is basically a trend where you are in price discovery mode and they are not finding any area where the market is happy to conduct business. Typically because there's been a change in fundamental, i.e. Trump's come on and said, I'm dropping interest rates by 1.5% in the next 6 months. You do not want to do anything but sell the US dollar. So therefore, there's going to be no area that people are happy to just keep doing longs at because they want to be shorting it. Everyone wants to be shorting it. So they short it, they take profit. They short it, they take profit. They short it, they take profit. That's a trend. Yeah. At some point, a trend will end. And a trend will tend to end with a balance. Now, we can conduct new price discovery from this area. Have the fundamentals changed? Do we now need to conduct price at a different level? If so, we will try that. And that's basically how the market works. So market structure is really easy to identify in that it's highs, lows, lower highs, lower lows, double top, lower low. It just kept going down basically from there, didn't it? But within all of the market structure, you will tend to find balance as well. Yeah, so we've got a high, low, lower high, lower low, kind of a little area of balance there. Price discovery, lower low. Pushed back down into the balance, lower low. Price discovery. Then we pushed up into a higher low. Yeah, so this is a market structure reversal back up. Then we had Trump on, so you can't really use this productively. But you got an area of balance there. You got an area of balance there with 2 price discovery moves, and all they are is false breakouts. Yeah, and this is why breakout trading is incredibly hard to make work, and why people that spend any time on breakout strategies usually don't last there very long. Because when you get a breakout, one of 2 things is going to happen. It's an area of balance, which is price discovery, which is accepted. And you go, fantastic, there's my stop loss, or there's my stop loss. Now I'm breaking out. I'm looking to try and get 2 to 3R out of it. And if it goes into a trend, which it does roughly 20 to 30% of the time, so your strike rate on breakouts is 20 to 30% roughly, you'll get to your target. However, it's more likely that you will break out and you will find a new area of balance, which means you never actually get to a 2 to 3R risk reward, because you will get scared out of your trade before you get anywhere near it by the next area of balance. And God forbid that area of balance then has a price discovery to the downside. What happens? You stop out at break even. What is it doing? Retesting the previous price discovery point, which it broke out from. And that's where market structure comes from. Yeah, this is why everybody that does breakout trading loses, because they get a breakout that works, and then they go, hey, stop us to break even. It's a free trade. No, it's not. It's a losing trade, because you broke even on the trade that would have worked because you got scared by the previous balance. Yeah. So that's basically how the markets move, how banks and institutions execute orders, and how market structure is formed. If we quickly look at those examples, because they're good ones. Euro odd. Was Euro odd, wasn't it? So lovely example here of an area of balance. Now, and this is where the kind of skill comes in identifying areas of balance. Areas of balance, depending on the time frame you look at, are going to be very different. So on a small time frame over 2 days, if you see price doing that over 2 days, that's a very small area of balance, but it will be part of a very large area of balance, which is the zone in which the price is happy to conduct business. All the way through here, there was no need for the banks and institutions to try and make money at any other price point. Think about your job. If you are a trader and you can execute all of your business within a couple of days, within 1% of price, and be done by lunch, would you do it? And just work half the day and spend the other half of the day doing cocaine, buying Ferraris and going to strip joints? Just thinking banking. I know people in banking. Yeah, I used to know people in banking. Would you do that? Yes, of course you would. So that's what they do. It's about efficient markets and conducting business as easily as possible. We then have a breakout, which is a price discovery move. Where did the price discovery move go? To the previous area of balance. Was that previous area of balance rejected? Yes. So it was again. And where are we now? We're back in the previous area of balance. So what are we looking at now? The lows of this previous area of balance holding and causing balance to continue, because this is where the market conducts business. It can't do it here. It's tried and it couldn't. It's a failure. It's a failed breakout. Look at your risk reward on this. You didn't even get to 1R before you lost. Yeah. So now we're going to sit here. One of 2 things is going to happen now. We are going to stay in this area of balance. The market will continue to do what it does, the least resistance form of trading, until it can't do it anymore and it needs to be a different price. Then we will get a price discovery. This will probably break out to the downside because we've tried upside and it failed. Right. Well, if that's not working, let's have a go down. We will, or we won't, make it down. Yeah. And if we do go down, where are we going? The next areas of balance. There's one there. Yeah. There's one here. Yeah. There's one here. Broke out. Area balance. Broke out. Area balance. Yeah. Price discovery. Accepted. No, we've accepted this price. No, we've accepted this price. Balance. Breakout. Retest. 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 It's all the market does. When you've found an area of balance, you move away from it, which creates a propulsion gap. This is why propulsion gaps work, because these are bank orders that are breaking out and succeeding. If they break out and they don't succeed, you're back into areas of balance. So we know that we're not going up there, we're going down. Yeah, that makes sense. So there's a good example there. Euro pound. Lovely accumulation break. Yeah, balance. Breakout. Yeah, now this one went into a trend. Price discovery worked, and there was absolutely no reason to stop until we got to the end of the trend and we went into a period of balance, because we couldn't break out any higher. So then they decided to attempt to break out short, and immediately it just worked. And then we had Trump. Yeah, but this is kind of part of Trump, isn't it? But you see where we've come back to and why we're bouncing here, because we're in balance again. We're just back in balance. Previous propulsion, balance. Yeah, this is where they bought it. They're rebuying it here. Why? Because this is where they bought it last time. It's all they do. Is they buy and sell at the same levels over and over again. Balance. Price discovery. Failure. Price discovery. Failure. Balance. Price discovery. Failure. Back into previous balance. Succeeded. So price discovery succeeded. Now we're transacting outside of that area of balance at this area of balance. Yeah. So when you're looking at zone trader and you're looking to trade the zones, think about where banks and institutions are going, where they're placing orders. I'm placing my zones around areas of balance because this is typically part of a propulsion break. I'm looking for where were they before they came out, because this is where they're heading back to. And they are either not going to support that level, or they are, because they did last time. This is the area of balance where we know there's a load of business to conduct. If they were happy there last time, if the fundamentals haven't changed when they get back here, they will be happy again. Yeah, they were happy here, and then they did a price discovery. Oh, look. Happy, balance, price discovery, balance. Yeah, mess. This is a good, this is what they, or I don't want to say we because I'm not a banker, but this is what is known as expansion. So you hear people, a lot of ICT people as well, accumulation, distribution, expansion. Yeah, it's all good in theory, and it is partly correct, isn't it? It's just executed very, very badly for 90% of them because they use a stop loss, because they don't understand how to use this to their advantage. But that's an area of expansion, which basically is kind of, if you like, consistent price discovery. Something's changed in the market and we really don't know where we can get our orders executed. So we keep trying lots of different levels and everything seems to work and everything seems to fail. And eventually you'll go, right, well, this is where we're going to do the business. Okay, brilliant. And then you get a price discovery which holds, and then you get a trend into the next area of balance. And inside all of these trends are multiple areas of balance. It's just that what's happening is a fundamental means that more of the market participants want to be long than short Canadian dollar, oil. Yeah. So they want to be longer than short. So what happens is you get more price discovery moves to the upside that hold than don't. But you don't know this until it's happened. Too late. You've missed it. Yeah. So there you go. That's basically it. That was a session I had planned for a long time ago, but I didn't do it. And I went through my list and I was like, I forgot that one. It's part of the how the market moves part, really, if you like. It's a more in-depth version of what I cover in the boot camp. But euro pound, yeah. So I covered that, didn't I? Yeah. So that's it. There we go. Any questions? Does the ORB V2 range need to be in 5-minute increments, i.e. the candle increments, or could it be set to anything 3-minute? You can set it to what you like. An opening range is whatever you decide the open is. Yeah. It's a range, basically. It's a price range that you have decided on. So if you want to use a 3-minute range, use a 3-minute range. If you want to use a 1-minute range, use a 1-minute range. Some futures traders use the first minute of trading as the opening range because electronic execution of orders these days is not like it was in the pits. And you've got probably most of today's normal business, if you like, can be conducted within that first minute. So when the first minute's trading is over, a lot of traders will look at that first minute opening range and they will break the opening range, because often you will find a session, when a session opens, it will just go. So if the first candle is bearish, it means there's an imbalance of short orders for that day. It could just go. So the idea behind taking the 1-minute ORB is you are taking a gamble, a chance, a shot on this being the low of the session. So the session just being a bull day. On trend days, a 1-minute ORB is mortgage day, isn't it? Yeah, think about it. Same as a 5-minute ORB. If a 5-minute ORB on a trend day and it goes to 150 ADR, yeah, you get the whole 150 because it opens and it doesn't look back. It's the same as a 5-minute ORB, or a 10 or a 15 or whatever. But it's not something you can decide on, because some days the 1-minute ORB is the one to take. Some days the 3-minute is the one to take. The next day it's the 5-minute ORB. The next day you should have taken the 15-minute ORB because the 5 was there, the 10 was there, so that was still the 5-minute range, and then the 15 went down to there, and then it broke long. So you should have actually taken the 15-minute ORB, which was also the 5-minute ORB and also the 10-minute ORB, but it wasn't the 3 or the 1. Which one should you pick? Well, don't know. Let's look tomorrow at what happened yesterday and then go back in time a day, and we'll use that as our ORB that day. But tomorrow we'll need a different one because it's random. Market movement is random based on the imbalance of long and short orders. No one knows what the imbalance of long and short orders is because no one has all that data until it's executed. Crystal ball, haven't got one. So you can't do that. You just wrap price around a range and hope that it goes your way. When it does, you manage risk. That's it. So take what you like. There is no right or wrong. So the ORB EA, the opening range breakout EA, as it stands at the moment, you can use any range you want to use in that, because you can define them all individually. So in ORB, just open up any old chart and stick the ORB EA on. So in the ORB EA, you determine what it is. Yeah. So range 1. Basically, it takes a break of range 1, range 2, and range 3. Yeah, that's why I've called them trade range breakout 1, 2, and 3. I haven't said trade the 5-minute, the 10-minute, the 15, the 1-minute, the whatever, the da-da. You decide yourself. So if you stick this on a 1-minute chart and you put that to 10:01, you are going to trade, if that is set to true, the 1-minute opening range breakout. I would suggest you do not use an offset if you're going to try it, but test it. Test your 1-minute theory and see what the risk rewards are. The risk rewards will be astronomical when it works. When it doesn't work, you will get chopped to death, because if you think about it, you're trading 1-minute algorithmic movement, which is going to be like this, isn't it? What they're trying to do is get as many orders and as much volume through as they can at the opening bell. And if that is not directional, it's just going to do that. And this is why for the first 5, 10, 15 minutes, quite often we get chopped around, because on the days where there is an equal balance of longs and shorts, it just goes up and down. What we're looking for is an imbalance of volume of more longs or more shorts to give price movement. If we don't get it, it causes balance. Yeah. Look at today. What did we have? This is not the Nasdaq Open, obviously, but this is the 8 o'clock opening range on the European indices. But we got a 5-minute range there. There's your 10-minute. There's your 15. There's your 20. There's your 25. What did we break out of today? There. So today's opportunity, funny that, isn't it? Was, this is the previous area of balance, price discovery, addition. this is basically 5, 10, 15, 20, 25, 25. So if you could go forward back in time now, an hour and a half, 2 hours, you would set your opening range breakout EA up to trade the 25-minute ORB. And you would not put an offset on it because you know damn well it's going to break and it's going to hold. So you would get in immediately there. But if you could do that and go back into the future, what you would do is buy the low of the 5-minute candle. Well, we didn't know that was going to happen, so we couldn't. This is what trading is about. All you have as a trader is the ability to wrap risk around strategy. If you use a stop loss, you will get stopped out regularly because price moves up and down. If you don't use a stop loss, you can adjust your price to a different point at a later stage when the market tells you which direction it's going. If it's in the direction you wanted it to go, you just take the money. If it isn't, you adjust your price and wait for it to go in your direction. And you analyze the market using previous information to tell you where the market is going back to. That's it. So the reason it's going here like that is because that's what it did last time, because this is an area of balance that was a price discovery which worked out. Then they found another area of balance and a price discovery move that worked. Now they're in a price discovery move that didn't work. So that is a failed price discovery back into balance, because we know we can trade here. We traded here successfully for 20 minutes. We're now trading here for another 15 minutes. At some point, one bank or institution is going to try a price discovery long or short. That will either work or it won't. And as long as there are people wanting to conduct business at this level and there's enough volume, it will stay at this level. Because if I'm a bank and I need to execute 100 million and you're all going to take it away from me now and I can be done by lunchtime, I'm going to bloody do it. Because that's my job. Yeah, that's all that price does. And it moves from zone to zone, area to area, over and over again, because that's what it needs to do. It's good to break out the swap costs, start to make you more conscious of it. Yeah, this is one of the reasons I wanted this data. Very, this is it was a real eye opener to me when I did the analysis at the end of last year. When I put immediately, first thing I did as soon as I did that analysis was I'm changing the position trade at EA to use swaps, because it was such a shock the amount of cost that I was unaware of in swaps. So it's a key thing for swing trading. For I mean this trade here, these trades here. I'm also going to put another section on here, which is going to be a breakdown of the last 10 trades, so I can just see what they were, because the last 10 trades I now got to go and find, and I don't want to find them, I just want them. So the last 10 trades here are these Euro New Zealand trades. Yeah, they were bought yesterday at 7. So where's the ones with the swaps on those? Yeah, so they were bought yesterday and then obviously closed out today. Yeah, so they were held for less than 24 hours. $100 it's cost to hold those trades for less than 24 hours. So if you are intraday trading, you are closing by end of day, opening range breakout, any type of intraday scalping strategy, not a problem. Otherwise, you have to pay attention to this now. It's 25% of the profit gone. 25% gone. Immense. 20% maybe. Yeah, but the cost of doing business, that's holding for one night. Imagine this turns into a 3-month swing. But this isn't me just mucking about. Yeah, I'm not interested in swaps. I'm interested in testing the dashboard, which is why I've got the buttons set up to do that. Yeah, that's what I'm doing. I'm just taking trades and then making sure everything works. So I'm just going to take a load of trades because I want to do some more testing today. I need to get some volume on. So yeah, critical now. Even if you're only holding intra-week, you've got 4 swap costs applied. You've got a triple and a single. So depending on how long you hold the trades for, obviously, it could be a different number. But It's a very, very important part these days. It didn't used to be, because interest rate differentials did not used to be as big as they are now, and they are now absolutely massive. But I've got a bit of a sort of my position trading career, if you like, is 6 years roughly. So bear in mind, I was only position trading for roughly a year or so before COVID. So I have experienced position trading making me really good money into COVID, dropping interest rates to nothing, having no interest rate differentials or swaps, to over a period of 3 years, those swap costs dramatically increasing. So it's only last year that I've looked at it, and it's only because last year was the worst year I've had. That's what prompted me to do a real in-depth analysis. And this is a reason it's really good to do analysis on your closed trades, because it's not necessarily you as a trader that causes a problem. There's external factors, obviously, that make the markets move, and costs involved. This has turned into one of the biggest costs of trading. Used to be commissions. It's not anymore, it's swaps. And you've got to be aware of it. So it does limit your earnings potential, because now I can trade any direction I want. Obviously, I can do what the hell I like, but I have to be aware that if I decide to press the long button on this, and it is a 3 to 4 week hold, it is going to be very expensive, which makes it very hard to get out. So I'm going to also look at developing and I'm not sure what I'm going to do, actually, whether I'm going to incorporate it into the position trader EA, or whether I'm going to develop it as a separate indicator to just plonk on the chart. But I'm going to develop a new addition to the EA, I think I'll probably do, which will draw the break-even line, which is at the moment obviously just drawing price break-even, which is what the support resistance propulsion indicator does. But I want to also plot exact break-even from a point of differentials in lot sizing, i.e. we're getting 1, 1.3, 1.5. So the actual break-even point where we break even at 0 money, I want to be able to plot that. I want to be able to plot on each trade the actual lot size, drawdown percent, and everything. So what we see in the dash here, I'd kind of like to see on the chart as well, but not as important. But I want that line drawn pre-swap and post-swap. So in your account here, so on your trades, this amount here, 68.59, is the gross figure. This is not what you've made. What you've made is 68.59 minus 966 minus 79 cents. Yeah. So you've got to take 10 off of that. So the actual profit on that is 78-ish, something like that, 77 something. So I want to plot where break even is financially for me, including all the costs involved on the trade. And I want to look at where it is including the swaps and everything. So my break-even line may show us there, but when I get there, I'm actually $300 in drawdown. I've actually got to move that much further, half an ADR to an ADR beyond, to actually get to the proper break-even, because this hasn't taken into account all of the costs involved in the trade. So I want to try and replot those figures, and I'd like to see the difference, because I'm the thing that concerns me about the new this new style of trading in line with swaps that I've introduced is, so far so good. I've been doing it for however long this has been released, which I think was November. I haven't had a losing month. Been phenomenal. But what it has shown me is that the number of trades that I'm taking has dropped dramatically, because I can now no longer take RSI extensions, long on euro pound. Whether or not I want to is irrelevant. I can't because of costs. So I might see this beautiful setup, reversal alert, retest, accumulation building, and a potential 50% retracement in play, but I'm not taking the trade. Now, I don't know what the costs are going to be for me to hold this trade long, because I don't know how long I'm going to hold it for. If I get in now and this thing just goes like that, or goes like that over the next 2 weeks, I'm fine. If it does this, that, and that, and takes 7 weeks to get the same result, that's a completely different amount of money I'm going to make. And there is no way to forecast time. You can forecast price, where you think price is going, but if it takes 2 days or 2 months to get there, is the difference between making $2,000 or losing $2,000 on exactly the same correct trade, because the cost of doing business has accumulated to a point where you can't get to the point where you think it's going to, because you just won out of the trade because you're in so much unbelievable pain, or you've used all the profit to do drawdown control on the thing before it gets anywhere near your target, which has all cost you money. So you're entering the market and all you're doing is you're giving swaps to your broker. You get out at break even. What has happened is you've actually given $300 to your broker and not made a penny. So it's a different environment to what it was 4 or 5 years ago, and it's incredibly important, which is why I've built this in. Not so much for any reason than I want to be aware of it. I want to see it so that it reminds me every time I'm looking to take a trade. Are you sure you want to do that? And the analysis of what it's costing each week to trade. Yeah, I mean, this is obviously just a demo account, but I mean, that's not, I don't know what that is, but look at the costs involved. I mean, the cost today, this week, on this profit, yeah, it's $140 to make that. That's $1,000, but I've had to give 14% of it away in swap. A lot, no? So in the end, we need is a DeLorean and a flux capacitor. Yeah. If I had a DeLorean and a flux capacitor, I wouldn't be sitting here talking to you right now. I would be on a beach. But I don't. So, no. Wouldn't that be nice, eh? Time machine. That's exactly what Back to the Future is, isn't it? Nicking the sports almanac. And that's why Biff became a millionaire, wasn't it? Because he knew the outcome of every sports result. If we knew the outcome of every day's trading, yeah, you can't get it wrong, can you? Like I went to my spin class on Saturday, and I made everybody crack up. We have a coffee after spinning, which is pointless because we do a 2-hour spin basically and burn off loads of calories, and then we go and have 2 whacking great lattes to put all the calories back on. But anyway, we were sitting there, and somebody asked me what I did. And I said, well, I build software for financial markets, and I trade financial markets and basically just buy and sell currency. And someone said, yeah, but the trick with that is you've got to know if it's going to go up or down. And I said, it only goes up or down. And it made everybody laugh. And I was sitting there thinking, why is that funny? To me, it's obvious. You're never going to be able to know whether it goes up or down. Well, I've got a 50-50 shot. It's not hard, is it? It's going to go up or it's going to go down. My job is not to decide which direction it's going to go. It's to decide where it's going to go and wait for it to get there. That's the bit I didn't get round to explaining, which would have made much more sense. But they thought it was hilarious, the fact that I just said, well, that's all it does, go up and down. But that's all it does. If we knew which one of those it's going to be today, we would all be billionaires. There would be no poverty, because I would be able to give a mobile phone to anybody in the world and say, here you go, for the next 7 days, you want to buy, sell, buy, sell at 9 a.m. And they would just go, whoop, make all the money they need, job done. That's it. Never have to work again, do you? If only it were that simple. I bet that US dollar Swiss is going up. So yeah, did anybody get on this yesterday? See, these are the days where you look at your settings in the EA and you go, I really wish that I had this set not to require that to break to be below, and I want it to be going up. Is this even ticking? Yeah, it is ticking. Why is that not changing? Only the US dollar Swiss. For some reason, the US dollar Swiss is just not working. It's not getting a reading, is it? Weird. I don't know. I'm going to keep an eye on that. Yes, on Axie, I am on US dollar Swiss, Aussie New Zealand, Aussie US, and New Zealand dollar US dollar. 70.30 H1 RSI. That's not working either. Yeah, 69.58. It's not 69.58. Evil, is your... I don't know if you can see on your VPS. Is yours... What's your reading on the hourly RSI there? Something wrong here, isn't there? Forty-seven, 44. Ooh. 54.68. Totally different reading. um, oh, I know. Oh my God. I need some error logging on this. I haven't got ADR. Can't enter trades if it can't do the calculations. I haven't got an ADR reading. I'm using ADR 10, and I haven't got 10 days worth of ADR data on the hourly time frame. That's it. Okay. Let me put period separators on. I thought it was, do you know what? I was sitting here, I've been sitting here all week thinking, why haven't I taken any trades yet? And it's because I've got no data. This is a problem with, it's a very, very independent thing. Sometimes on brokers, when you set up a new account, it dumps loads of data. Sometimes it doesn't. And I've never got to the bottom of why that happens. because it's very intermittent and very random. Occasionally people message me when they bought the support and resistance propulsion indicator, and they're like, it's not drawing any of the lines on the chart, or they message with something, and it's all to do with data. If you are trying to calculate 500 days or 500 candles worth of support resist propulsion gap data, and you've only got 300 candles, it can't do it, because you're asking for something it just physically can't supply. So you reduce the number down, all of a sudden it starts working. That's the problem. I'm just looking at the logs, and I'm getting logs saying zero divide, which basically is to do with ADR calculation. It's trying to calculate lot size over 10 ADR, and it's going, I've only got 6 ADR. I can't do it. So I'm creating a zero calculation. I can't do that. That's what that error means. So the solution is to do this. Go back in time. So the way that you do it is you uncheck the button for scrolling the chart to the end so that you can go back, and you literally just keep hitting the home button, which loads data. So what I've got to do on every chart is just basically untick and make sure I go back in time far enough to get data, because it won't have wrong RSI readings as well. So if you're using the 21 hour, you need 21 hours worth of RSI data and stuff. I need to do this. I need to find out a solution for this, because this is the problem with working with ADR, unfortunately. Because it's a new account, you don't get the data. So I have missed trades. I'm not going mad. That will all start to work, or should all start to work now. There we go. It's really annoying. This morning I set up a new RoboForex account, and all the ADR lines from the indicator were at the same level. Had to go back a few years on the chart for all pairs to fix it. Yeah. I've never had that problem with RoboForex. I can instantly identify it, obviously, because I know what I'm looking for, but it's, if you don't know what you're looking for, you can't find it. Making sure RSI is ADR is correct. 63 on Euro Swiss. I haven't got the ADR indicator, have I? Euro Swiss. 48. Sorry, I'm just. That's going to be a problem in the ADR account as well. Not that I'm complaining, but I didn't spot any of these being out. But looking at it now, 97 on pound Swiss, 71. Data can't be that far out, surely. I'm going to have to check this on all of them. Yeah, I need to find a solution to this because it is a problem. This is the difficulty with ADR on new accounts. It can cause headaches. So this is unfortunately at the moment the only real solution is to force your broker. So where am I? January 2023. There you go. So just make sure you go back like 6 months to a year. So go back to last January with your data. And that's enough just to make sure you've loaded it in. It's got to be loaded in on the time frame you're running on as well. If you flick to a daily chart and then you flip back before it's closed a candle, it won't do the calculations. So I might Google that today. Might make that part of my today to figure out a way of. I need a fallback basically, or a message or something just to tell people, because I've fallen foul of it now. The trigger line is at 125 ADR. Oh God, of course it is. Yes, thank you for that. I'm glad you're awake, Evil. 125 ADR is 97 on the pound Swiss, which is 71 plus 25%. Correct. Yeah, so ADRs are right. That's fine. One of those days. Do you know what? I've got what I call coding brain. When I'm coding, you go into a zone. If any of you have programmed or coded in the past, you know you go into a kind of a little time warp or time zone thing where you suddenly put your head down and you put your head back up again and 17 hours have passed and you're like, wow, I got a lot done today. But I'm falling asleep on the sofa about 8:30 at night because your brain is the most efficient or inefficient, I should say, muscle in your body at using energy, and you're just so tired and stuff. You have to give up and stop coding when your brain goes, I'm sorry, what does 10 print go to 20 mean again? You just have to stop. And I've been like that for 3 days this week, so I'm not with it at all. I have to take breaks from coding because I don't know how game designers and developers do it all the time. It just focus you must need is unbelievable. Anyway, so yeah, correct. The ADR reversals are doing the right thing. Morning, Plowman. You're late. We're just about to finish. I'm just loading some data in because I've just realized I've got a problem with my RSIs, which will be fixed by doing this. So yeah, so that's it for today. Hopefully that was useful as a session. Yeah, we'll see where we go this afternoon. So 12 o'clock today. Bear in mind we've got the interest rates coming for the pound. So we're forecast to go from 4.75 down to 4.5. So we are going to get a drop in those interest rates. If we do not get a drop in the interest rates, it'll be a bloodbath. So the pound will go through the roof, basically, because the market's factored in a 0.25% drop. And if it doesn't get it, it's got to buy all its pound back. So, yeah, just be aware of that today. It's unlikely, very unlikely we'll get anything different. They're not going to go down below. But yeah, Plowman, go and watch the replay. It's quite a good session today because we were talking about, well, if you're interested in how the banks move the market, it was an interesting session. If you're not, skip it. It's quite important information though, and it will really help you. Go and watch it. There we go. Right, data loaded. So those of you that got trades on FTNet, if you're still here, are you using the last closed candle must be above below level set to true or not? Because if you're not, you will have taken a trade on those probably anyway. But if you are set to true, you still might not have got the trade. So I don't know. Depends. This setting is quite critical for getting trades in different places because this requires a much stronger push and a close of the candle outside that 30-70 zone with a signal at the same time. So it's quite a strict entry criteria. Yours is set to true as well, yeah. So I should have had those trades on, shouldn't I? Definitely. Which is very annoying. But anyway. So I'll set all these back now. that explains it. I'm just going to monitor this for zero divide errors from now. But yeah, that will be because of unable to calculate ADR data. I have got a fallback in the RSI calculation. So with the position trader EA, it does have an automatic fallback for RSI, because when you first load a chart on a new broker, your RSI figures will either be 100 or 0. So which means basically if it can't do the calculation, it returns either a 100 or a 0 result. So I've got a filter in the position trader EA to say if RSI is 100 or 0, do not trade, because it means basically we've got to wait until your RSI figure is reading correctly to be able to do trading. But I don't know why that's obviously to do with the ADR calculation, unfortunately. But anyway, shorted hopefully now. So hopefully my US dollar Swiss in a second will update to the correct figure when the candle closes. Right, I'll leave it there. Anything you need, let me know. Other than that, I will be back tomorrow. US dollar Swiss 55.05. Yeah, there we go. Back to right numbers now. Right. Anything you need, let me know. I'll be back tomorrow morning, and we'll obviously go through a recap of the week. We'll have a look at what the interest rates have done, and obviously we'll get ready for non-farm payroll tomorrow. So, but I will be in Discord today. I'm going to the gym now, and then I'll be back after that. All right, and I'll keep working on the dash today, and yeah, other bits and pieces. So I will update you as and when. All right, so have a good one. Anything you need, let me know. And if you've got anything you want to cover in the live rooms as well, let me know in Discord, and I can put a session together on anything. If you want anything recap that we've already covered as well, or whatever you want to do, just let me know if you've got any ideas on stuff, because I'd rather just do what people want than coming up with my own things as well. So, all right, have a good one. Anything you need, let me know, and I'll see you next time.